For Morningstar, I'm Christian Charest. Equity funds in Canada had a bit of a slow start to the year with some lackluster returns in January, but they really kicked it up a notch in February. Practically every category was up, including returns of upwards of 3%, 4% for several of the categories. I'm here with Morningstar fund analyst Vishal Mansukhani, who's going to talk about some of this performance. Vishal, the best performer last month was precious metals equity, the second month in a row with a double-digit return. This time it was 11.4%.
Of course, so performance in the precious metals equity category was driven mostly by gold prices. Given the recent political tensions in Ukraine, recent U.S. economic growth missing estimates, and turmoil in emerging markets currencies, investors flocked towards the metal as they viewed it as a safe haven. So this had a good impact on some gold producers and the metal price itself, which was up 11%. And naturally, that had a positive impact on the category.
Another top-performing fund category was European equity with a 5.9% gain. Now, an interesting we noticed this month is that, unlike in previous months, currency effects didn't have that big of an impact. It was all market gains in various markets in Europe.
That's an interesting observation. And apart from the recent political tensions in Ukraine, for the month of February, European stocks did really well because they were supported by a positive outlook for corporate earnings, and consumer confidence across the continent was high, and also the outlook for exports was better. So all this had a very positive impact on European stocks.
Okay. Now switching to U.S. equities, another strong performer with a 4.2% return last month.
So I did say earlier that recent economic growth in the U.S. did miss estimates, but investors chose to focus more on the Chicago PMI, which is a measure of business activity, and they shrugged off the recent misses of economic growth because it was skewed downwards by areas which were impacted by winter storms and severely cold weather. So just to focus on the Chicago PMI had a positive effect on the U.S. stocks, which were the primary driver of the U.S. equity category. Moreover, investors also expect the Federal Reserve to continue with supportive monetary policy.
Okay. And finally, let's look at Canadian equities. We've already mentioned the gold, which is part of the materials sector, one of the three largest sectors in Canada, but the others also did well.
So consumer confidence in Canada was higher, inventories were higher, businesses were increasing their inventories, and also economic growth in the last quarter did exceed estimates, and this again had a positive impact on Canadian equities, and the category did really well because of that.
Okay, thank you very much, Vishal. And for more on Morningstar's survey of fund performance for the month of February, please click on the link right below the video player. And check back with us regularly for more news and updates.